Hi there. For those of you who are not here and on Zoom, you're missing a fantastic table full of goodies and goodies and goodies. So the next time, maybe you'll show up. So that's my little guilt thing for the day. Also, I've got a few commercials from the Royal Palm Coast Realtor Association. Summer Smackdown is this Thursday from 5 to 7 at Dixie Roadhouse. We are trying to win the big food belt to help stamp out hunger. So bring food or bring cash to Dixie Roadhouse on Thursday, 5 to 7. If you don't want to do that, just come to the office and drop off food. It can be dog food, cat food, people food. It's all to help the population of Cape Coral and Fort Myers this summer. That's commercial 1. Commercial 2. In your email, you should have received something from the association about bylaws. We've made some major changes in how the leadership is going to be put together for the future. We've had 2 leaders pass away, and we've had to go in and change the bylaws. So it's going to be strengthening the leadership roles and things in that. So please take a few moments, read it, and vote yes. If you have any questions, please call me, and I'm more than happy to discuss it with you. So that's the commercials for the day. On to education. We want to make you the best realtor that you can be and the most profitable realtor you can be, and save lots of money so that you can retire in style, which is what we're all about. So we have asked the experts in how to protect your money. So Noack Company is going to tell you all about how to keep the money and maybe even make more money with it. So I'm going to shut up and turn it over right now.
Thank you. Oh, I have one. Thank you for the introduction. We've got a few of you over on Zoom and a few in person, so I'll try to shift my gaze accordingly. And we do have a wonderful table full of goodies. So, and we'll leave some stuff behind. And next time you're in the office, you can just peruse it and pick up what you like. So that's no problem. We do have a giveaway as well. So I know obviously people who are virtual can't drop their card in. So maybe just like chat it over. I think there's chat in Zoom. I use Teams, I'm sorry, but I think you can chat it. So just chat it over to Joanna if you'd like to be entered in that. I can't remember what it is. It is what is in our giveaway? It's a 4th of July goodie box with is it Yeti? We put a coffee cup thing in, right? So one of the cool cup things that is a tumbler for all your 4th of July fun, as well as some other good stuff. So if you want to be entered, go ahead and just send over to Joanna your email and we will draw a winner for that. So without further ado, I am so excited to be here. Thank you for bringing me back. It's been, I think, since before COVID, so when everything kind of went a little bit off kilter. And they asked me to speak today about, in my words, whether people need to be a PA or whether the LLC was the right fit for them. So in my outwards words to people who don't know the accounting side of it, we're going to talk about entity types. So how people tend to start in your world, how they tend to start setting up, and then the transgression as to if they're the correct, if they're not the correct. Very, very top level. So please don't take this as gospel. If you have a tax pro you're working with and this is intriguing, definitely reach out to them. If you don't, please reach out to me. So if you'd like to go to the next slide for me. All right, so this is my beautiful family in the Bahamas last summer, which if you don't feel like dropping a boatload of money, don't go. It was our one and only. I am from here. I'm not born and raised, but I was raised here. Some of the people on there I may know, I'm not sure. So if so, you know all this good stuff. But I did graduate from FGCU. So I went off to college. I came back for my senior year and my master's, and then I have been here ever since. I am a CPA. I am also a certified tax resolution specialist. So without going down that way, what that means is I fix tax problems. And generally speaking, very judgmentally speaking, most real estate agents at some point in their career have some kind of tax issue they need help with. So whether it's just that you're a newer agent and it was your first really good year, and you just never had the guidance as to what you were supposed to be doing tax planning, and like your jaw drops when you see the tax bill, or whether you got a little bit behind and you just need someone to help guide you and catch you up and all that stuff. That is an additional certification that I have. I love working with those people. Obviously, like I said, those are my kids. We can go on to the next. All right, so what I'm going to talk about is I'm really going to focus on the entity types that you guys would have. So I'm going to skip over some of the ones that I don't see, like partnerships, like that's not really a thing that realtors do. So you may have other businesses that you're doing that in. We're not going to talk about that today. What we're going to talk about is sole proprietors, LLCs, and S Corps. Now, very top level, what a sole proprietor is very, very common for new agents. So you first start this, you may still be doing a side hustle while you're building your name up. And this is kind of part-time, or maybe you jumped right in, but a lot of people when they first start operate under their name and their social. So that means that when I get my 1099 from JJ, it's going to be Andrea Dillon with my social security number. That is a sole proprietor. An LLC doesn't, and we're going to go into each of these a little bit more in detail. The main difference with an LLC is now I have an actual business set up, whereas as a sole proprietor, it's just my name. Like there is no business to set up. I also have no protection. So if something were to happen and go wrong, I have zero liability shield whatsoever. With an LLC, literally nothing changes tax-wise, which we'll talk about more in a minute. But now my 1099 goes to Andrea Dillon LLC instead of my name. And I have an actual, like a social security number for my business. I have an EIN. Everything else is identical. And then we'll start to talk a little bit deeper about S Corps, which we're going to stay kind of top level because there's a lot in there. And that one does actually have some tax advantages, which is what everybody I know wants to hear about. That's the PA. So if you hear your colleagues talking about a PA, in my world, it's an S Corp, but it's the same thing. What I do want to say, just in case I never speak to anybody again and they jump on Sunbiz tonight and go set stuff up. I am, of course, not an expert in your bylaws. However, you are very, very limited in what you may call your entities. So if you want to set up an LLC, so if by the time we're done with this, if Sally Seller is operating under her name and social, and she says, gosh, I really don't like that, I'm going to at least do an LLC. You can't do Sally Sells Sunshine LLC because they won't be able to cut you a check. You won't be able to get paid. It has got to be your name LLC or your name PA. And we see probably 5 clients a year that don't do that. And then they have to fix it all. And it's an easy fix on her side when you set up the new one, but it's a little bit messier on my side when we have to file things that didn't really exist. So just do it right. It's your legal name. The only variation I believe you're allowed to have is a middle initial. So you can do Jane Doe LLC, or you can do Jane Z Doe. That's it. No changes. All right, sole proprietors. These are my least favorite way to do business because you have zero liability protection. So that means that if Joanna walks me into a house and I have my 6-year-old with me and the chandelier falls on my child and I'm very angry and I want to sue somebody because I unfortunately believe that we live in a sue happy world. So there's a lot of people who just like to point fingers. Probably the first thing I'm going to do is say, hey, whoever owns this home, you should have, it wasn't safe. It wasn't safe for me to enter. Now, what happens if that homeowner is foreign or bankrupt or, insert problem here? I can't touch them. The next thing, if I'm that type of person, that I'm going to do is say, well, Joanna walked me into this home. You should have walked the premises first and at least made sure that my child wasn't going to end up in the hospital because it was not safe. So if she is a sole proprietor, again, that's just her name and social security number, which is very, very common for people in real estate. And that means if I'm successful, then I can sue her and I can try to take everything she's got. So if she's got, retirement accounts in her personal name, if her husband has stuff set up in his personal name, like whatever it is they've got, like it's on the floor for me to try to take. So I really, really, really don't like sole proprietors just because you can accomplish the exact same thing, which we'll get to in a moment with LLCs, but it gives you that added layer of protection without really costing you any, with minimal money and minimal change. But for those of you that are operating as a sole proprietor, like I said, it's your name and your social security number. It does not file its own separate tax return. So that means that when you're filing your taxes, you are on your 1040 tax return. There's just like an attachment, basically, which is where you put all of that. There is nothing formal set up. So if you try to go out and buy a car and you put it in your business name, like you don't have a business name to put it in. So it's the right answer sometimes when you're just starting, but once you say, yes, this is going to be what I'm going to do, my opinion is it's not a good place to stay. Next up is LLCs, I believe. Yep. So LLCs, these are much more common and they do have a formal business setup. So like I said, if I wanted to do that, then it would be Andrea Dillon LLC, right? That's the only thing I'm allowed to do in your world. And I would have an EIN for it. So that means that I have to actually go to the IRS website. It's super easy. Apply for an EIN. I have to actually use my LLC. So we see a lot. I mean, she's laughing, JJ's laughing, but we see a lot where somebody tells me, oh, I have an LLC. I have Andrea Dillon LLC. They give me their 1099, which is Andrea Dillon LLC, just like it's supposed to be, but they never set up a business bank account. So like they can tell her to put the money wherever they want. So it just stayed in their personal bank account. They paid all their personal and business, this hot mess of stuff out of this account. Well, if I'm not treating it like a business, why should anybody else who's trying to sue me treat it like a business? It's called piercing the corporate veil. So like if I don't treat it like a business, why should the attorneys have to treat it like a business? So if you have an LLC, please make sure you have a separate business bank account set up. Honestly, taking one step back for a second, if you have a sole proprietor, so like you're just going to stay under your name and social, which again, I don't like, but it's fine. Do yourself a favor and set up a separate checking account for it. So it would just be a separate personal checking account, have all your commission income go into that, pay all of your business expenses out of that. And then come tax time, you're going to make your life a whole lot easier because everything in that account is business. Back to the LLCs, like I said, actually use the business bank account. It does you no good if you kind of just like set it up and then you're not actually doing it. This files taxes exactly the same. So it still goes on your, and I'm assuming that you guys are all, because again, I'm talking to real estate agents, that you don't have business partners involved. So assuming you're the only owner, which like 99.9% of the time in your world is the case, it files on your personal taxes, same exact thing, same exact attached schedule. Nothing changes for me. My fees don't go up for preparing your return. You don't have to do payroll. Like it's super easy. It's literally just the initial setup, making sure your broker is updated with the change. And then everything pretty much stays the same. You have the Florida fee and like to be a business in Florida, that's say $100, give or take a year. And that's it. And it gives you all that protection. So if this is what you're doing and this is how you're making your money and your goal is to continue to grow this, my opinion is this is the way to go if you're currently under your name and social. All right, next up, forming an LLC does not save you any money on taxes. We unfortunately hear this all the time too, because somebody's dad or friend's cousin's sister on the golf course, or hey, I was at happy hour and the bartender's wife she used to do taxes and she told me this. And we hear it all the time where somebody says, I set up an LLC so I could write off all my expenses. If you're operating a business, you can write off all your expenses. So you're not doing an LLC so that you can now all of a sudden write off your MLS fees and your super security fees and your closing gifts. Like even if you're operating under your name and your social, you can still write those off. So you don't have to set up an LLC for that. That's not why you do this. You do it for the liability protection, not for saving money. All right, we can go on to the next. All right, now we're going to talk about S Corps. So again, in your world, we'll come back to this later, but in your world, that's the PA, right? Now there are LLCs that can convert to S Corps, which I will come back to later. But if you're listening in and you're like, well, gosh, I have an LLC, but I think I file an S Corp, you might. But for the ones who have no idea, we're going to call them S Corps. This is a separate business entity. So like I said, so far we've talked about sole proprietors, name and social, and LLCs, where they just file as like an attachment to your personal taxes. S Corps do not. These actually have their own tax filing return that's due, and it's due a month earlier. So if you're used to filing your taxes by April 15th or your extension, because lots of our realtors extend, because our season is also your season, that's due. If you have an S Corp, it's due March 15th. We see it every year. The first year that somebody sets up something formal, if they either did it themselves or their tax pro was not super involved with them, they call us like April 1st and say, hey, you can take care of the extension for me, right? And I go, you're an S Corp, we already missed it. Sorry, we want to file ASAP now because heads up, the late filing penalty, if you are an S Corp and you miss the deadline, it does not matter what your profit is. It doesn't matter if you lost money, if you made money, it is a flat fee of $210 per month until you file. So people who get a little bit behind, and I'm not going to go down that road too deep, but if you get a little bit behind, so like you're a year behind and you call me and you say, hey, I need to do 2020 and 2021. Can you help me? Yes, I'd love to, of course. We need to get 2020 filed ASAP because that's $210 a month that's spinning until you file. And the IRS will not mail you anything about it because it's still spinning. So you won't be getting notices from them saying, hey, what was this? Like they don't know until you file. So just keep that in mind. First year S Corps, you're due a month ahead of time. PAs. So again, I'm not going to go too deep. I'm going to go top level. So if you have questions, please reach out to me or whoever's handling your taxes on this. But if you were to leave this training today and go to Sunbiz and say, I really want to set up an S Corp, and you go through all the Sunbiz steps, you will not find S Corporation on there because it is not a state thing. It's a federal thing. It's an IRS thing. So that means when you go to Sunbiz, you have to either pick LLC or corporation. You go through the whole thing with Sunbiz, right? You go to the IRS, you get your EIN, you're all good there. Then there's an extra form that you have to send to the IRS to say, hey, please let me be an S Corporation. By the way, that's due 75 days after you do this, which people miss all the time too. They think they can just do it when they do their taxes. Like they can bring it to me, say, hey, I'm going to be an S Corp. And I'm like, yeah, that was due 8 months ago. So I can help you, but it's messier now. So it's due like then, like when you set it up, you should do that form, or whoever's doing it for you should do that form. It has to go to the IRS. People consistently don't know if they did that form. They can't remember. People don't usually set up and close businesses all the time. And it has to be mailed or faxed. It is not an online form. So that's usually how I find out if it was done or not, is I say, well, it probably would have been a pain because you would have either had to print the form out and physically mail it to the IRS, or you would have had to find, if you don't have one, a fax machine and fax it to them. And they go, oh yeah, I didn't do that. and then we can go from there. So if you're watching this, just so you know, we see those missed a lot. It's a very messy fix and it's something people don't realize as well. So keep that in mind as well. And we're good on this one. We can go to the next slide. All right, so where's the tax savings here? And again, I'm going to try to stay kind of top level. Both sole proprietors and LLCs, like I said a few times, I'm going to drill it into you. File taxes the same way. So that means there's no tax savings there. S Corps / PAs / LLCs that choose to be an S Corp, there's a potential big tax savings there. Now, if you're filing your taxes as either an LLC or a sole prop, but you're doing it on your personal taxes, right? Like you didn't do this S Corp piece. Then that means that you're paying federal taxes. Everybody's got to pay federal taxes. We can't make those go away. We can mitigate them, but we live in America. We got to pay some taxes. But you're also paying self-employment taxes. And that is the piece that most people don't plan accordingly for. So everybody kind of thinks in their back of their head, all right, I made whatever, I profited 80 grand this year. So, maybe 20% of that or so. And they kind of have that number in the back of their mind for taxes. They don't think about the extra, say 12% or so in self-employment taxes, which an extra 10 or 12% of 80 grand is a big chunk of change if you didn't plan accordingly for it. S Corps don't pay self-employment taxes. So federal taxes doesn't change. Like I said, we can't make those go away. You still have to pay them. But if we're looking at an $80,000 profit, so that's like what you got in your commissions, take out all your expenses, right? What's left is 80 grand. And we're going to use 10% because that's a nice, easy number that everybody can follow. If I'm a sole proprietor or I'm an LLC and I got to pay that extra 10%, that's $8,000 on top of what I plan to pay. If I'm an S Corp, same profit, I didn't make any more money, I didn't lose any more money, everything was the same, I don't have to pay that $8,000. That's a lot of money to not have to give to the IRS. Now, the important thing with S corps is if you're an LLC or a sole prop, right? There is no payroll. So like if I am operating under Andrea Dillon LLC, I'm not an S corp. I didn't send them that form. I didn't want to send them that form. And I want to get money out of my business bank account. I literally just transfer it out. That is the correct way to do it. So I just go to my online banking and I hit transfer. I transfer whatever, $5,000. I get $5,000. There's no taxes withheld, right? I just transferred money. That's how you're supposed to do it. When you're an S corp, and we're not diving into this because it's a whole nother presentation just on your own. As you can imagine, the IRS does not like losing out on that $8,000. So their caveat to that was that you are now required to put yourself on payroll. So that means your company, Andrea Dillon PA, is now required to pay me, Andrea Dillon, with my social security number, a wage. If you think about any job you've had in your past, when you get paid with a wage, there are payroll taxes, right? If my employer pays me $5,000, I don't get $5,000. I get like $4,237 because the rest of it went off to all kinds of taxes and stuff. So same thing has to happen. We see a lot of agents who, same thing, they got half of it. They got the guidance to set up the PA, but they didn't get the follow through guidance on this piece. And so they say, oh yeah, I paid myself a wage of whatever, $20,000 this year. And I go, okay, so where's the W-2? And they go, what are you talking about? I didn't do a W-2. And I'm like, well, what about the taxes? And they're like, well, I don't know what you're talking about. So there's another piece in there. So when we go through all of this, what I want you to take away from this is not the details of the wages, is just that if you have an S corp, or if you think you should have an S corp, someone needs to talk to you about that. So we're not going to dive into it, but again, whether it's me, whether it's someone else, just keep that in the back of your mind that, hey, if I have this same $80,000 profit that we've been talking about this whole time, and I don't want to pay that $8,000 to the IRS, so I'm going to go ahead and do the S corp because I like to save money, and I need to put myself on salary. I'm going to pick my salary, right? Because it's my company. So let's say I pay myself, I don't know, $20,000 for the year as my salary, right? That 20 grand is not me transferring money. That's me actually like contracting with a payroll company or my accountant or whatever. Like there's another step involved. So just keep that in the back of your mind. And that same 20 grand we're talking about is going to have payroll taxes on it. So it's not an $8,000 savings. It's not dollar for dollar because there's payroll taxes on that. Now, what's important there? So the next thing people always ask us is they say, okay, well, if I got to pay payroll taxes, which is arguably the same. So 10% self-employment taxes if you're an LLC or a sole proprietor, 10% payroll taxes if you're an S corp, same percentages, right? So 10% self-employment taxes on 80 grand is the 8 grand. So then they go, okay, well, if I only have to pay payroll taxes, same thing, on what I pay myself, and I get to pick what I pay myself, I'm going to pay myself $5,000 for the year. I'll pay my 10% of that. I'll pay my $500. I'll save $7,500 and we'll call it even, right? IRS says you can't do that. That's called tax evasion. And you have to pay yourself a reasonable wage. So it is not reasonable that if you're making 80 grand a year, that you would pay yourself $5,000 a year. Like that's obviously way too low. Now, what's important here, because we see this wrong a lot too, it is also not reasonable that if you make 80 grand a year profit, that you would pay yourself 80 grand a year in wages, right? Like that takes away all your profit. The whole point of being an S corp now is just lost because you don't have any profit left. You paid it all to yourself. And I will tell you, because I'm sure you guys have interacted with people and this has crossed paths with clients before, mortgage brokers like to tell people to up their wages because they don't all understand how taxes work. So they are not all created equal. You want to be somewhere in the middle because if you have that same 80 grand of profit and nobody ever told you, so you're like, well, gosh, I'm just going to pay myself 80 grand. Like that's what I made, right? That means that 10% payroll taxes of 80 grand is 8,000. You paid the same amount. So if you float in the middle somewhere, now you have some tax savings. If you pay yourself 20 grand, right? 10% of 20 grand is 2 grand. Do you want to pay 8 grand or do you want to pay 2 grand? I'd rather pay 2. So, okay, I know that was a lot. Sorry. Next slide. All right, so now we're going to look at some examples and actually put numbers to it. It's on here. I do have copies here, and I can always email these out if it's not like super clear in here. So just keep me posted on that. All right, so Rosie Realtor and Cody Closer are both real estate agents with the exact same amount of profit. I know, amazing. They both made 100 grand after they took all their expenses out. So that means their 1099 was probably like 150, right? Rosie is an LLC and Cody has an S corp. So I don't know how clear this is on there. So hopefully you guys can follow along. We've got Rosie Realtor on this side as an LLC. She's got her 100 grand of profit, right? You pay 12% of that in self-employment taxes. So she's going to pay 12 grand just in that extra fund tax. You also still have to pay federal taxes, right? So on roughly that, we're going to assume that Rosie Realtor is somewhere around a 15% tax bracket. That's going to be close. So 15% of 100 grand is 15,000. No, it's not. I usually use 10%. No, that's right. It's 15,000. So if we add together her self-employment taxes of 12 grand, her federal taxes of 15 grand, she's shelling out 27 grand to the IRS, right? By the way, this is a super common amount of profit for most active real estate agents that we see constantly. So Cody Closer, can you still see me over here? Cody Closer, S corp, same $100,000 of profit. Didn't make any more money or any less money than Rosie Realtor did. He took a $40,000 wage. Remember what I said, we got to be somewhere in the middle there. So he's now paying that same 12% that Rosie paid in self-employment taxes. He's paying it, but he's only paying it on 40 grand, not 100 grand, because that's how it works when you're an S corp. So he's paying $4,800 in payroll taxes instead of the $12,000 that she paid in self-employment taxes. He has the same amount of federal taxes, right? So he's got 15 grand in federal taxes. So his total tax bill, so his $4,800 in payroll taxes plus his 15 grand in federal taxes is going to be just shy of 20 grand. So there's like a $7,000 tax savings difference from Rosie to Cody without anybody actually making any more money or what. He just gets to, I don't know, he could go to the Bahamas. So, all right, next slide, please. It's usually very significant. So what would you do with an extra $7,000 of extra cash in your pocket? You can fill your gas tank. That's a lot of money that we're talking about. So we're not talking about just pocket change. Yes, I really like sweet wine, if we haven't established that. All right, so I am very, very, very quickly going to talk about something called the QBI, the Qualified Business. I don't even know what the last one stands for because everybody calls it QBI. The QBI deduction. Everybody should be somewhat familiar with that because that's one of the tax rules that past President Trump passed. I think it was 2017, so it's kind of been around a while. But if someone's completely new to the industry, they're not going to know about it. So what that means from a like bird's eye level is that whatever your profit is, so with our 100 grand example, $100,000, that you basically get, like most people, unless you meet like a few really sky high criteria, most people, you get 20% off. So that means on that same 100 grand, 20% of that, so $20,000, you don't have to pay federal taxes on. You still have to pay self-employment taxes, that extra one we've been kind of nitpicking on. But for federal taxes, $20,000 of that is tax-free. So that's a big chunk of change too. That doesn't matter what type of entity you are, whether you do it as a sole prop, if you're an LLC, if you're an S corp, like you get that. Now, what's really important here is it's on your profit. So I at least get one person every single year who has that $100,000 of profit, right? Somebody told them to take a $90,000 wage, which lowers their profit. So now they only have $10,000 of profit. but they have a W-2 for 90,000. So it still equals 100. You're just moving it up and down, like around on your tax return. So now this 20% off is only on the 10,000. So they only saved $2,000 pre-tax. So then times your tax bracket. So $2,000 is tax-free instead of like 18 or 20 grand. So having your wages set wrong costs you money, not only in payroll taxes, because you could overpay on that, but also you lose out on this. So it's really, really important that that's a regular conversation you have with your tax pro. It doesn't need to be every time you run payroll, you call me up and you say, hey, Andrea, what do I pay myself this week or this month or however frequently you do it. But it should be something like at least once a year. You're saying, hey, especially in your industry, because you're so up and down. So you could have a year where you do, I had an agent this year that made like $800,000, but like the year before, he only made like 250. So like that's a moving target. It should be reflected on how you're doing. There you go. Qualified business income. All right. S Corp things to think about. So typically what I hear next is, well, why am I not doing that? Like, I want to save $8,000. So let's, sign me up. Let's do it. So there are costs that come with being an S Corp that an LLC or a sole proprietor does not have. So if you are making real money, it is likely a win. It is likely something that you should do. However, if you're still building your name and you're still growing that and you're not quite there yet, it will cost you money. So I always like to tell people that, because I don't want to tell somebody who's only got like 20 grand in commissions this year and they call me up in a year and they go, what the heck, I had to pay all, like it didn't work for me. So again, I'm not expecting all this to sink in, but just be aware, if you are an S Corp, then you have to pay for an extra tax return to be filed. I know I keep moving, I'm sorry. You have to pay for an extra tax return to be filed that you didn't have when you weren't an S Corp. So that means my fees or your tax pro fees are going to go up. Don't be surprised. And payroll, you didn't have a payroll company before. So whether you hire a payroll company or whether you're doing it like through QuickBooks, like there's different ways it can all happen, but they all cost money. So that cost is going to go up. So it doesn't work if your business profit, let's say, is only 20 grand this year, right? Your 1099 is like 40 grand. Half of it is your profit, let's say. So you got 20 grand that you walk away with, right? So if I'm going to charge you, let's say $800 or so for a tax return, and the payroll company is going to charge you, let's say $1,200. So 1,200 plus 800 means you've got $2,000 of new costs that you wouldn't have had. If you only had 20 grand of business profit, 10% of self-employment taxes on 20 grand is $2,000. We didn't save you any money. You just broke even. So sometimes it actually goes the other way where it costs you money. So there isn't necessarily a magical spot that you go, wow, when you do this is the right time. But what I like to tell people is typically when your profit is around 40 grand or so, that's when you're going to come out ahead. Now at 40 grand profit, you're not going to come out $8,000 ahead, but you will come out ahead. You'll come out a few grand up, and I'd still like an extra few grand in my pocket than the IRS's. So you still win. So in your world, I'm going to say this gently because 85% of our real estate agents are not the best accountants. So they can't tell me what their profit is until like I tell them what their profit is. So from a 1099 standpoint, every single realtor knows what their commissions are. So if you are making, let's say, 80 grand on your 1099 of what you're getting paid, then your profit is somewhere around the amount that we're talking about. Usually realtors are at like a 50% profit margin. So if you're making 80 grand of commissions, your profit is somewhere around 40 grand. And that means that you should be having this conversation. So again, whether it's with me, your tax pro, you should be having this conversation. I actually already talked about that. So I'll refresh a little bit on it. So what I like to tell people is when you're setting it up initially, like I said, you can either pick LLC or you can pick corporation, both of them can get to that S Corp piece that we've been talking about. If you already have something set up, so if you've already got an LLC set up and you've just been doing it that way for a couple of years and you're like, oh gosh, like I wish, now do I have to like shut everything down? No, your current LLC every year has the opportunity to say, hey, now I want to be an S Corp. The same form gets filled out, which the number's on there, it's a 2553. The same form gets filled out. It's due, like if you already have an existing entity, then it's due by March 15th. So like you got to decide early in the year that this is going to be the year that it's going to make sense for me. You can't wait all the way until like November and then be like, oh, now I want to do it. I mean, you can, but you got to pay me a lot more money because it's a lot messier. So in a perfect world, it is. Yes, I am. Pay me as much as you want. You can write it off. So just know that you can do that both ways. You don't have to shut anything down and like do something new. Likely what you're doing can just be converted into it, but definitely talk to your tax pro about it. Likely if you're already working with somebody, this is a free conversation. If you're not working with someone, this is a consult that's a free conversation, and it can likely save you a lot of money. So my opinion on these, for what it's worth, is if anybody has had any IRS issues in the last 2 years, it's not fun right now because the IRS is like a hot paper mess of whatever. So this has to be done with paper. Like I said, remember, we can't e-file this. You're either mailing it in or you're faxing it in. We fax it, but most people don't have a fax machine these days, so they mail it. And the IRS is losing like a bunch of things. They're also taking a year to process these right now. They're only supposed to take 3 months, but they're at a year. So if it's done wrong, it'll take you a year to figure it out, and then it can be messy to fix things. So my opinion is it's well worth it to pay somebody to handle it for you, but you don't have to. So in a nutshell, as kind of a summary, LLCs, I didn't do one for sole proprietors because like I said, I really don't like sole proprietors. So LLCs, the pros, it protects you from liability. It gives you that extra liability shield that I think we need in today's day and age. They're really easy to form. They're really easy to operate, and they're cheap to form. And there's not very many rules on it. So people who, like, if you have an attorney that's a friend, they always want to tell you all the stuff you have to do. And like most of that, you don't have to do. Cons, self-employment taxes get expensive. That $8,000 we've been talking about, they start to kind of just like creep up on you. S Corps. The pros of S Corps is you don't have self-employment taxes. Woohoo! And you have more control over the payroll taxes. So the piece you do have to pay, like you can kind of control that. It's not just like a blanket amount. So you're very much in control. The cons are there are extra fees involved. So, you've got the tax prep fees, you have the payroll processing fees. So again, as long as you're making enough money, you still win. But just remember there are fees that go with that. There are a few more rules about structure and ownership and things like that, usually a non-issue in the real estate world. And thank you for listening. I know taxes are not the most exciting thing to talk about, but it does save you money, and I try to make it as fun as I can. So I hope everybody wasn't falling asleep on me, and I really appreciate the opportunity to share this with you.
JJ always loves to talk. I think one of the biggest takeaways is, remember, we're real estate professionals, and we always tell our unrepresented sellers and everything, you need an expert to do your business, right? To sell your house. It's exactly the same thing. Have your taxes done, start your financial planning, use an expert from day one. If you're new in the business, it's the perfect time to sit and talk. Even if you're not going to become an LLC or a PA for a year or two, you've got a roadmap to success and a way to save money. And that's the most important thing, because I know you want to invest in real estate and all of that good stuff. But they do have some other services. For those of you who didn't pick up your packet, we're dealing with a lot of foreign investors, and they don't truly understand what that 15% holdback is. Does that mean I pay sales tax? Can I run away back to Germany or Denmark and not pay taxes, etc.? They can help you out with a lot of that. So if you have a foreign person, call them, set up an appointment, and have a conversation with them. if you have some trouble with the IRS, like you haven't paid your taxes in 10 or 20 years, which realtors are known to do, call them because you guys represent, right?
Oh, absolutely.
They can absolutely represent you at the IRS, make a deal, save you some money so you can buy a house in 2022, 2023, etc. So give them a call. We only like to bring you great people in our classes, and we hope to see you live and in person very, very soon, hopefully Thursday, 5 to 7 at Dixie Roadhouse. So as we always say, peace out.